The Expert Group for Aid Studies, EBA, is a government committee with a mandate to independently evaluate and analyze Sweden's international development assistance in order for it to develop and improve. EBA has 10 members with backgrounds in different fields of development cooperation and a secretariat that is implementing the decisions. Apart from our reports, we also arrange seminars, workshops and special meetings for relevant actors. Every year we summarize our work in the EBA Aid Review. This annual report can be ordered from our secretariat or downloaded from eba.se. EBA has an independency in relation to the constituent, the government, in relation to what is evaluated, and in relation to the authors that are engaged. The authors are responsible for the content of the reports and the recommendations made. Everything we produce, reports, seminars, and our podcast, EBA-podden, is available on our website.
Very welcome to this seminar that we have called Synergies in Action. And we, the organizers, we are the Swedish Expert Group for Aid Studies, EBA, and Perspectives Climate Research. My name is Jan Pedersen, and I'm the Managing Director for EBA. And as an independent government committee, our task is to evaluate issues of relevance to Sweden's development cooperation and implementation. During the last years, Sweden's aid policy has for several reasons focused quite a lot on synergies of various kinds between development cooperation and other priorities, often linked with Swedish interests. One of them is Swedish exports, and a still large priority within Swedish development cooperation is climate. EBA therefore commissioned authors at the Perspectives Climate Research to conduct a study exploring the potential links between Swedish institutions, official institutions, public institutions at this arena. And the result is a report to be presented at this webinar. First, the report as such does not discuss whether or not these synergies shall be a priority or not. This is a political decision that is not the focus of the report nor the discussion. We aim, however, to discuss possibilities as well as risks with linking these priorities. Now, the report looks at potential synergies between 4 different Swedish institutions. Our development finance institution, Swedfund, our largest donor agency, SIDA, and our 2 export credit organizations, SEK and EKN. It also links up to several other official or semi-official actors, such as Business Sweden and the International Council of Swedish Industry, NID. And then it also makes an international comparison with 4 countries. So it's quite a rich report, and that would also risk to be a long discussion. So it covers quite a lot, and in just a while, one of the authors will give you a presentation of the report, and that will be followed by a panel discussion. Since we do have limited time, and in order for the discussion not to be overly simplified, scattered, or shallow, we have decided to focus this particular discussion on an actor that is arguably one of the most remote of the actors in when it comes to development, and that is the export credit organizations. And during the seminar, we will welcome comments and discussions in the chat function, but we will not have time to answer them. So we really encourage you and invite you to continue this discussion with us, with the authors over mail and in social media after the webinar. With that, I would now like to hand over to Igor Shishlov, which is he's managing director for climate policy at Perspectives Climate Research, and he's one of the 4 authors of the report. Please, Igor.
thank you. It's a pleasure to be here today, and thanks to EBA for organizing this webinar. So I'm here to present, as Jan said, the report that was published earlier this year. And I would like to also acknowledge my co-authors, Max Schmidt, Lise Weber, and Zitron Gia, who participated in this study. So I will try to frame the discussion for the panel. I will start with a brief macro context, what our findings are for Sweden. I'll briefly touch upon a case study about the Tanzanian railway finance. And I will then finish with the opportunities and, of course, risks related to closer cooperation between development and export finance. So let me start by giving a quick context regarding where we stand right now. So in 2025, we observed a 23% reduction in official development assistance, and this is actually the largest drop on record as documented by the OECD last month. And for the most part, this decline can be attributed to 5 largest donors, notably the US, the UK, Germany, France, and Japan. And there are several drivers of these cuts. So first of all, we've got, of course, the political pressure. So basically, a lot of development budgets are being reoriented towards defense. We've got the overall sort of economic austerity, whereby there are, fiscal pressures to state budgets and probably reduced appetite for overseas development spending. And finally, there is a trend of sort of a reorientation towards more national trade and economic promotion as opposed to development. So as a consequence, we've got less concessional finance available for climate mitigation and adaptation, particularly. And there is a growing pressure to find alternative funding sources, including from export finance. So this puts export credit agencies, at the crossroads. So as you may know, traditionally, export finance is aimed at promoting exports from their countries. So it typically does not have an explicit development or climate mandate. However, this model is currently under pressure from multiple angles. So first of all, there is the climate angle. There is a pressure to align export credit agencies with the Paris Agreement, being public finance institutions. For example, at COP26, there was the famous COP statement that essentially that was signed by around 40 countries that commits to phase out international public finance to fossil fuels and reorient it towards clean energy. There is the Export Finance for Future, E3F coalition, which is a coalition of, let's say, progressive European countries that significantly ramped up actually clean energy finance, which went up from 3 billion to around 14 billion in 2023. Unfortunately, there was a drop again in 2024 to 8 billion, but there is a clear trend and a clear pressure here. We've also got the energy crisis, the multiple energy crisis, following the Russian invasion of Ukraine, following the war in Iran. And ECAs are, in this sense, being reframed as institutions that may help address the energy crisis and are reframed as sort of industrial policy lever and not just trade facilitators. And then finally, we've got the finance gap. So essentially, ECAs are capable of mobilizing large amounts of private capital where ODA cannot reach often. So this triggers a question, essentially, can ECAs evolve into more climate active and more, let's say, mission aware institutions without losing their export mandate? And this is exactly, one of the motivations of our study. So in our study, we asked essentially the following questions: how export and development finance institutions can create synergies, what are the prerequisites for such synergies, and also what are the risks of closer cooperation, which I hope we will be able to discuss today as well. In terms of the scope, so as Jan already mentioned, we focused on the 4 Swedish institutions, EKN and SEC on the export side, and SIDA and Swedfund on the development side. We also did a peer comparison with 4 European countries, with Denmark, France, Germany, and the UK. And the period covered is the decade following the adoption of the Paris Agreement. And finally, in terms of the methods, we did an analysis of portfolios of these institutions. We looked at their climate-related policies, and we conducted a series of interviews with stakeholders from these institutions and the government. So what does our study find? Here, I would like to focus on key, let's say, headline conclusions from the study. So first of all, we observe a limited direct overlap between development institutions and export institutions, and this is kind of natural. We can say that this is by design, essentially. Export credit agencies naturally gravitate towards higher income countries and to rather mitigation-focused projects, whereas development finance institutions naturally focus on lower income countries, on climate vulnerable countries, and they typically work on both mitigation and adaptation projects. So in this sense, we see the synergy not as a complete overlap or a complete duplication of financing, but rather sequencing of interventions by different institutions. Now, the second headline is that Sweden has very strong institutions, but somewhat fragmented governance. So the 4 institutions operate under separate mandates and through separate governance channels. There is Team Sweden, which is tasked with coordinating this work. However, there is no joint, no formal, let's say, climate finance mandate. Pilots do exist in terms of cooperation and synergies, but what we see as a gap is really scaling. So the capacity of jointly structuring project may still be, let's say, underused or still being explored. And what we find is that blending instruments may be constrained by rules on tied aid. And some of our interviewees actually stressed that the EU state aid rules may be one of the obstacles, as well as in some cases the OECD DAC governance. And then very briefly, and I don't want to steal here from the panelists from other countries, but very briefly on our peer comparison. So we looked, as I said, at 4 countries, and there's some interesting findings. Like, for example, in Denmark, we observe actually a structural institutional integration under one roof of EIFO. In France, I think there is an interesting lesson on legally embedding climate targets that make them sort of bulletproof, let's say, against political cycles. And then in Germany and the UK, they each have institutional families, but they're also, let's say, more fragmented than Denmark, and we observed some project level cooperation. So overall, I would say that our study confirms that Sweden has very strong capacity overall, but structural coordination is kind of still maturing, I would say. And I must also mention that there's been a few developments since our research last year. So the new export and development financing instrument was launched, which I hope will be discussed. And also Team Sweden, continued to deepen joint coordination of institutions. Now, on this slide, you can see the results of, one of the results of the portfolio analysis. So very quickly, this just confirms that the geographical footprints of development institutions and export institutions are rather different. And in terms of the sector breakdown, so again, export credit agencies focus on sectors like energy, rail, and SIDA and Swedfund focus more on sectors related to development and maybe adaptation, the water sector, although the energy sector and the renewable energy portfolio of Swedfund is also quite significant. So again, this confirms our diagnosis that the overlap is low by design, but it doesn't mean that there cannot be synergies. And the added value that we see is really sequencing of interventions across institutions rather than duplicating each other's footprint. And I think the case study that we looked at on Tanzania is a good illustration of how this can work in practice. So this project is 2,500 kilometer standard gauge railway across Tanzania and several other neighboring countries. Total cost of around $10 billion US, and it's actually implemented or financed, through a multi ECA approach. We've got, besides Sweden, we've got ECAs coming in from Poland, Italy, Denmark, and also China. And it is co-financed by some development finance institutions like the African Development Bank and KfW from Germany. But what's important to underline here is that development finance institutions add to this project beyond finance. So NIR, the International Council of Swedish Industry, worked on strengthening environmental and social risk management, also improving reporting and data flows, thus helping reduce grievances around this project. And Swedfund helped operationalize the environmental and social management system. So I think this project is a good example of how ECAs can bring risk coverage and bring scale, whereas development finance institutions can help strengthen safeguards and can help with, let's say, the quality of local implementation of projects. So the synergy in this case is, let's say, it's not automatic. It requires coordination. It depends really on clear definition of roles, standards, and accountability. And again, there's been some developments since we conducted the study. So in the current context, the next lots of this project's financing have been signed earlier in April. But at the same time, there's been an announcement that Sweden is going to phase out bilateral aid to Tanzania by August 26. So this is now becoming a live policy case to see how this situation unfolds in the future, and we can also maybe discuss it with the panel. All right, and now coming back to the synergies, how synergies can be created, really. Again, summing up in a very nutshell what we found in the report. So first of all, complementarity of instruments, blending and risk sharing. So again, this is about sequencing. How can we combine concessional finance and technical assistance from development finance institutions, especially at the early stage of the project? How can this be combined with export credit agencies, guarantees and loans that can bring scale to the projects, and also attract private finance. Scaling and replication. So again, Team Sweden's threefold objective model can be used, as a template. However, what we underline is that the climate needs to be a guiding, let's say, principle or sort of a gating criterion rather than treated as just a co-benefit. Then shared implementation and knowledge. So this is, of course, also important. Joint due diligence, ESG integration, local engagement, like I already mentioned on the example of the Tanzania project. And of course, peer learning across institutions is one of the enablers of maximizing such synergies. And finally, we also looked at the international processes, international alliances and negotiations, and we think that this can be leveraged, particularly if Sweden can, speak with one voice from all four institutions, and this would help Sweden to have more influence in this forum. And I'm particularly talking about the Expert Finance for Future, the relatively new Net Zero ECA Coalition, but also other forum like the OECD arrangement reform, where there's been heated negotiations on phasing out fossil fuel support. There was an agreement on coal phase out, but then oil and gas restrictions stalled. So in all these fora, I think Sweden can have a very constructive and proactive role. And finally, coming back to some of the risks of ECA and development finance integration. So a few risks that we identified here. So first of all, the risk of development objectives that may be weakened if there is really pressure to prioritize trade and prioritize commercially attractive projects, we may risk a shift, from grants to more commercial term loans, and there may be a risk that Swedish business interests may outweigh recipient countries' development and climate needs. Finance may also move away from those who need it the most. There may be a drift towards middle income countries as opposed to low income and more vulnerable countries. And also mitigation may be prioritized over adaptation because of its bankability. And this is actually a real risk. In another study that we conducted that was published last year in Nature Communications, we actually observed, beyond Sweden, we observed in general that shifting from fossil fuel to clean energy expert finance is actually accompanied with a shift towards more higher income countries. And this is problematic because countries that need this finance the most may be left behind. So the risk is real and needs to be addressed proactively. Then transparency standards and rules. So here we identify that combining development and expert finance may result in double counting of some climate finance, so overseas development assistance versus climate targets, under climate finance under the Paris Agreement. And there may also be risk of bypassing, some of the OECD and WTO rules. And finally, in general, cooperation can become too complex, if we combine basically requirements from development and expert finance for projects. This may raise transaction costs, and fewer projects may be able to qualify, if conditions are not streamlined properly. So these are, of course, not the reasons not to cooperate. But these are the real risks that need to be taken into account. So these are reasons to cooperate, carefully and thoughtfully. And this would be, I think, really interesting to hear what the panel thinks about it. So I will stop here. I think I've spoken enough. You have the contacts of the authors, and as Jan said in the beginning, if you want to have a more detailed discussion, because the report is, I think, almost 200 pages, please feel free to reach out to us. And looking forward to hearing other perspectives and the discussion. Thank you very much.
Thank you very much, Igor. And what an achievement, I would say, to summarize the kind of main points of the report in these few minutes. It is really a rich report, and I recommend everyone to have a look at it for the details. I would like to introduce the panel in a while, but first just an overall kind of question, and maybe also a question for clarification. So you mentioned in your 2 slides, you talk a lot about the kind of possibilities on one slide and also the risk and challenges. And you talk during your talk quite a lot of risks and possibilities and hindrances for scaling up. And one of them you mentioned the tied aid and the rules and the agreements on untying aid within the OECD. I understand it as I don't know if I misunderstood it, but kind of the main logic is that, I mean, you do not use official development assistance at the scaling part, right? Or would you mean that there's a need for export credit or credit guarantees to be financed by official development assistance in order to facilitate scaling up? Or what did I misunderstand? And then giving those your discussion, having written this report, weighing pros and cons, what would be kind of your overall take on the realism for scaling up? So in a very shortly, are you an optimist or a skeptic about the possibilities? Please, Igor.
Yes, thanks, Jan. So, well, I think there are different approaches, of course, to, let's say, jointly financing the projects. But yes, what we talk about in the report is sequencing, and yes, using potentially development finance as a catalyst. But the risk regarding the reporting, the double counting risk, I think it's not an unsurmountable risk. What it requires is very clear definitions on climate finance and clear reporting. So this is something that needs to be, addressed proactively. And on your question with regards to optimism versus pessimism, so I'm cautiously optimistic. And actually, I'm cautiously optimistic, especially on the direction of travel. So, as I mentioned in the report, we have recommended, to have a joint climate finance assignment, to have more harmonized mandates and metrics. And I think there is real movement, real advance on these points, basically. So the new development export and development finance instrument that went live last year, and I hope we can hear a bit more about it later. And also Team Sweden, is deepening its coordination. So this makes me cautiously optimistic. What I'm less optimistic about is more broader speed of the transition, particularly in export finance. I already mentioned this other study that we conducted that essentially looks at the deep dives into the numbers, and it does document a shift from fossil fuel to clean energy export finance, particularly driven by export finance for future coalition. But overall, the speed of this shift is not sufficiently, is not fast enough compared to our needs and climate targets. So overall, cautiously optimistic, but with some caveats.
Okay, so of course, optimism. Let's see. Maybe we'll end with that question also to the panel to see how they balance pros and cons on it. And the panel, I would now like to introduce them. Igor, you will stay on in the panel, of course. But now to discuss this report and other questions, we have with us now Lise, Beirne, Chapman, Pedersen. You are the director for the international regulation team at the Export Investment Fund of Denmark, called EIFO, which is Denmark's export credit and also agency, and is also figures quite a lot in the report as an actor. We also have Maja Audiberti. You are deputy head of the export credit unit within the French Treasury, responsible for international affairs, climate, and energy. And then we have Agnes Stenström, project leader for export and development finance at the Swedish Export Credit Guarantee Agency, EKN. So, at the report, you talk a lot of untapped potential for cooperation and so on. So I would like to start with asking Lise and Maja. You've heard Igor's presentation, you read the report, you know the Swedish structure and how cooperation takes place. What are your experiences from your respective countries in working to realize these synergies? Are there any large kind of similarities or dissimilarities with the Swedish example? So please, I would like to start with Lise.
Yes, thank you very much, and thank you for having me on the panel and for the interesting report and presentation. It's been very interesting to read. And I would say, I mean, it was very interesting to read the recommendations also, and I think I can start off with saying that we can maybe also take some of that home back in Denmark and see how we can use it. But if I was to look at the sort of broader cooperation that we have in Denmark, then we have, I mean, as you mentioned, we are the Export Credit Agency, and we also have a national promotional bank aspect or as part of our mandate at EIFO. But today, for this purpose, I will focus mainly on the Export Credit Agency activities, which I think would be directly relevant for the topic here. But we also then have, as is stated in the report, Impact Fund Denmark, which is the DFI, and then DANITA, which does the development cooperation. And if I was to start with maybe one of the barriers to synergies or cooperation is that we have different ministries overseeing our activities, and I think when you have a bit of a top difference at the top level, it can sometimes make cooperation a little bit more complicated. But going beyond this, we have, for instance, in the latest National Development Strategy from 2025, focus on more cooperation in emerging markets, specifically with the focus on the green transition and how EIFO and Impact Fund Denmark are there identified as key actors in this process, and how we can combine our efforts and combine instruments and see how we can then provide a more attracting financing package specifically targeted at more vulnerable countries and with the climate focus. So I'm hoping that also with these more policy-oriented messages that can help us increase our work and coordination more also at a project level. So maybe I would stop there for now.
Thank you, Lise. Then I'll turn to Maja with the same question.
Yes, and thank you very much for the invitation for this panel and for organizing this very interesting discussion, which is useful also for France to know how Sweden is working and trying to improve their coordination and cooperation between agencies. So on our side, it's also very much work in progress in France. I think what has helped a lot launch this cooperation between AFD, our French Development Agency, which is the DFI, and BPI France Assurance Export, which is our ECA, is the fact that we have a very strong political impetus, both at international level, and I think that Igor mentioned it, but there's this willingness to given ODA is shrinking, to be better at mobilizing private capital. And so this has come from the international perspective, but also nationally, with our president being very eager for all agencies to work together and calling, maybe switching from development aid to international partnerships. So having more of a partnership with recipient country rather than imposing on them, one project that we have decided in terms of development aid. So this has helped give let's say, our two agencies the willingness to work together. And now we're a bit in the implementation phase, which is still ongoing, but I think it's starting to show some results. And how did we reach those results is first to get the teams to talk to each other, because they were not used to talking to each other at all because of the issues of different mandates, as Igor mentioned, and other issues that Lise mentioned as well, including ministries in charge and so on. But having the teams working with each other at highest level, doing joint trips in developing countries, doing pipeline sharing, all this is something we are working on, as well as procedure harmonization to facilitate actual work on projects. And I think that's what is starting to give a few results, but we are still very much on an ad hoc basis in France, as it's mentioned also in the report, and we're slowly trying to structure something, but I think we're a bit in the same situation as Sweden. With maybe one thing which is easier for us is that we have more overlap between the sectors and geographies that our exporters are working on and DFI is working on, because our exporters are very good at everything that's construction, so construction of hospitals, schools, water infrastructure, which is needed for the populations, energy access, electrification in the context of the transition. So this is something which we have both in common with AFD and with BPIAE, and helps finding common projects and working together. Maybe one last point, just to react on what was mentioned on the hurdles. It's indeed, we also see a bit of difficulties with the regulatory environment, given restrictions on how we are allowed to mix tied aid, untied aid, with arrangement rules and also state aid rules. So again, thanks for this good report, because there's a lot of things we get behind. Yeah, thank you.
Thank you very much, Maya, and thanks, Lise. And it seems like, at least part of what's found in the report resonates quite well with your experience and the importance of political will to start with, and that for that also to translate into priorities and clear priorities, and the having kind of coherent mandates for the institutions. Thank you very much for that. I would now like to turn to Agnes, and you touched on it, Maya, the overlap and the report, and you, Igor, presented also this quite limited overlap between both country and sector-wise between Swedfund and SIDA on one hand and SEK and EKN on the other hand. That is that export credit agencies tend to work with mitigation in richer countries, whereas development actors work more with adaptation in lower income countries. But then it says in the report that EKN, you are still active, but not with high volumes in several of the partner countries. So Agnes, what would your take be on this issue of limited overlap, and what are kind of the main activities needed in order to increase EKN's engagement in lower income countries? Please, Agnes.
Yes, thank you. So just let me start by saying this to answer your question. So the most climate essential infrastructure projects in developing countries never actually get built. Not because the technology doesn't exist, and not because there isn't enough will, but simply because there is not enough finance for them. So in the lowest income countries, these projects often cannot stand on commercial terms alone. And this is exactly now why this new concessional export and development financing instrument that we now have in our toolbox that EKN administer, that we work together with SEK and SIDA and other Team Sweden actors, that is so relevant here. Because this allows us to create a bridge between aid and trade and to leverage investment for social and economic development. But again, one instrument cannot solve all of this, and this is also then how we have to work together. And as has been already pointed out, Team Sweden actors bring different mandates, different tools, and different risk appetites to the table. So the real question is then, of course, then how the coordination and how it can be sequenced across the project life cycle. And this is not only addressed in the climate sector, but also across all sectors. So it is the real value is not to fill each other's gaps. It is to be complementary, to be the right actors stepping in at the right time. And this is also what has been mentioned, but the challenge where development finance and export finance operate on different timelines. And that SIDA and Swedfund engaged earlier in project preparation, capacity building, and de-risking, and EKN and SEK came in later when the project is more mature. But really, this rhythm doesn't line up in their own. So we have to think about how and when we bring things together. And we have already the foundation for it, and that has already been strengthened, not least the last year within the Team Sweden. And so that is really when we can make the most out of our mandates and tools and risk appetites to address the bottlenecks. So the example that was already highlighted, Tanzania standard gauge railway, that is an excellent example of when Team Sweden actors come together, working in practice, where all EKN, SEK, Swedfund, NIR, and SIDA collaborated from early social and environmental due diligence to ensure the highest global standards in such a complex project. And I visited this project just a couple of weeks ago and really saw it with my own eyes, how appreciated it was also on the ground, because it enabled to attract additional financing from other sources. So this really proves that we can work, and when we actually coordinate. So joint pipeline sharing and market analysis, where we work within the Team Sweden framework. We have made progress, but we can go further. And also to identify the projects together at an early stage in energy, transport, and water before they're ready for financing. And also to really ask the hard financial questions together early so that we know which tool we can use and when. Because the tools are really there, and the concessional financing instrument is one of them, but there are many more instruments, and we have how we can work in our mandates together. Also, I would like to mention here those of us who have been working in the development field in Sweden for many years. We have a foundation already starting from the Policy for Global Development, PDU, for those who remember, starting from early 2000, where all policy areas came together to address the global challenges. And that is also where many of the agency collaboration that are really strong and we're still focusing on are stemming from. So we have the foundation in place. So it is more to strengthen that systematic coordination, to not only have ad hoc collaboration when a project is already underway, but to start from scratch. And so this is great, and happy to continue, and also great to learn and hear from the other countries.
And I really would like to get back to you with the new instrument. So I'm going to ask you to present that in a while, I think. But I'd like to, and I also would like to have Lise and Maya comment on Maya already commented a bit on the limited overlap and how you work with that. But first, you mentioned the Tanzania example, and maybe this is a question to Igor then, because I mean, first of all, there's in your slide as well, you show that there's quite a lot of various export credit agencies involved from China, from Poland, not only EKN. So do you have can you say something about how they coordinate and cooperate and the extent to which that is done? And can you also comment a bit on, because if you look at the Tanzanian railway project, you could argue that, well, the different Swedish actors are to some extent supporting various interests. I mean, in EKN's and Swedfund's example, the firms or the industry, whereas maybe in SIDA's case, more civil society organizations working for indigenous rights, for example. So Igor, what would you like to comment on that?
Sure, yes, happy to. Well, on the coordination between different ECAs from different countries, we, frankly speaking, didn't look in detail into that. We rather looked at cooperation between development and export finance. So, and I think the Tanzania case is a really good one because, well, you rightly point to different interests that are at play. But I think it's actually thanks to the involvement of development finance institutions that they could take into account, local specificities, impacts of the project, evaluate different environmental and social risks and manage them to ensure that there is, prior consent and other risk management approaches. And we also, in our study, we had a sort of a counter example. We had an example of a mining project in Democratic Republic Congo, where essentially there was a different story. There was kind of an absence, let's say, of coordination and probably not a consistent engagement on the development side. And that actually made, the project supported by expert finance more exposed to different concerns related to, local communities, human rights, and environmental impacts. So basically, where DFIs, let's say, are not engaged, there is a higher risk of, other interests than development prevailing, and this is one of the conclusions. And actually, the Tanzania project, I think, is now, as I said, kind of like a live test, given that Sweden is planning to reduce or withdraw development engagement in Tanzania. So what's going to happen afterwards? Because it's a project with long repayment periods. What can we expect then? I think it's a good test, real life test.
Sorry, just to follow up to that, what you're saying is that, so would the exit of Swedish development cooperation with Tanzania then risk to have kind of development perspectives being considered? And would the risk be that they're not considered enough then as a result of that? Or?
Well, yes, it's an open question. I hope that it doesn't come to that, of course, but I think it's one of the risks that may need to be proactively addressed.
And thanks, Igor, and all the three other panelists. If any of you want to comment on the Tanzania case more, please just shout out now. Else, I'm going to. Okay, so I'm going. I would like to hear. So Maya, you said that the French you have not as limited overlap as Sweden, if I understood you correctly. So would you like to just expand? I still my understanding is still that the bulk of the French export credit agencies are not active in lower income countries. I guess that would be correct. But would you like to just expand a bit on that? And also, Lise, what can you say anything about if you recognize kind of the limited overlap that is shown in the Swedish case? So please, Maja.
Yes, happy to. So let's say that BPIAE's activity is very focused on some big sectors. So if you only look at volumes, indeed, we do a lot and very much in high-income countries. But because we are cruise ship exporters and Airbus exporters, which are very large amounts and kind of hide, behind those two big trees, you hide the smallest forest. So indeed, but it is true that a lot of our export, we prefer to go into high-income countries, and our exporter prefer to go to high-income countries, especially in the energy transition field, actually. But we also have a strong presence, in South Africa, and also in Latin America and Southeast Asia, where we overlap with AFD. So we still have a large pipeline. I think in terms of percentage, of course, the overlap is different, but in terms of volumes of pipeline of projects that we can do, we still have a lot to work with. I think we identified a common pipeline of 14 billion euro with AFD since 2020, looking at projects since 2021. So yeah, we still think we have a lot to work with yet, and if we manage to already cooperate on these type of high volumes in developing countries, we have room for progress.
Thank you very much, Maja. So Lise, what would you like to say about the Danish overlap or lack of it?
Yes, so thank you very much. I mean,
now I cannot hear you, so you might have accidentally muted yourself.
Can you hear me now?
Yes.
I can hear her.
I can hear.
Yes.
And I maybe yeah, Lise.
You can hear me now?
Yeah, great.
Perfect.
Great, please.
Perfect. Yes, no, thank you very much. And I think it's true. The picture is a little bit similar to what appears in the report for Sweden, that we have mainly, so from the export credit aspect, mainly been active in higher income countries, and the IFDK has been more active in the lower income countries. But we have now from EIFO, we have a new strategy for going towards 2030, where there is a goal that we should be more active in the global south, and in particularly in Africa, and with a focus of doubling our annual activity in Africa. So there is already a bit of a push on, from a higher level towards moving into that space. And then also we have from the Danish government, there's been mandated 850 million Danish kroner to two funds for both IFDK and EIFO, particularly targeted at projects in Africa. So hopefully this would also help move our sort of cooperation forward in this part of the world. And I think perhaps the advantage that we have, that while maybe our regional focus has been divided, our sort of sector aspect is probably more in line. So we are both agencies, we have a heavy footprint in renewable energy, the wind sector, but also in the healthcare and sort of public infrastructure. So there should be synergies there with this sort of push from our government to work more together. So I think that should help, and I think that some of it will come from the top, but I think also some of it will hopefully come a bit bottom up, because I know that we have in some areas like ESG, for instance, we have colleagues that cooperate quite well from both IFDK and EIFO. So if we are together on the same projects, there are a lot of synergies happening very much at the ground level on a particular project. So it might have to come from both top down and bottom up cooperation.
Thank you very much, Lise. I promised to get back to Agnes about the question of this new development finance instrument. So I know that you will not have an enormous amount of time on you to say something about it, but please, Agnes, can you just because this is something, I guess, I know that it's something new, but to what extent has it kind of panned out? What has happened with the instrument? So what is it, and how has it come into play? Agnes,
Yes,
please.
thank you. So we are in the early phase of a 5-year pilot, and we see a strong market interest from this. And so the instrument has already proven its value in opening business discussions where Swedish export wouldn't otherwise have been the first choice. So really bringing competitive strength of the Swedish value chain into the table. So we have developed a handful of potential deals. So we have a project pipeline ongoing. And here we see a really strong fit for when it comes to climate, and that the instrument is explicitly designed for markets where commercial financing is lacking. So that is really speaking to climate infrastructure in developing countries. Think off-grid, renewable energy, grid modernization, sustainable transport. And this is sectors where Swedish companies are world leaders. So this enables projects to be bankable that would otherwise not be. And but this is not sector limited. Wherever there is high development impact and commercial financing fails to materialize, this is where the instrument can play a role.
But the main then difference from other credit and credit guarantees, save the Ukrainian one maybe, is that you can use official development assistance for the credits as well as for the credit guarantees, right?
Yes. So we, for this particular instrument, we can subsidize the interest of the credit and also provide a grant funding for this particular instrument that fits the criteria.
Great. And then you said that there's been a lot of interest for it, and you mentioned some pipeline projects, but no kind of credits has been issued so far. Or can you say something about when would you expect that to happen?
We have many ongoing discussions, so we hope to have the first transaction during the fall. But we see a great value for this as a complement to the rest of our operations.
I know that you can't be too open about it, we do have a sharp deadline at 3 o'clock. And we have a few minutes left. So I would like with this just to direct me to the whole panel, one in each turn. If you have any, so you'll have kind of a 1-minute wrap up on what would be kind of your main takeaways from the report and this discussion of importance for your country and the way you work with realizing potential synergies. So may I start with Maya, maybe?
Yes, I think if we have to sum up what we learned from this report, and what we want to do is really to see how we can better support the climate transition and help support SDGs in those developing countries with the instruments we have at hand. And we see that with shrinking ODA, there's a room for export credit to really support those two aspects, and especially on climate, which is something important for us in France and with BPIAE. And so what we need to work on, I think, is really the sequencing, the continuum of instruments, which enables us to make these projects happen and have every instrument at the right place, making it the most efficient possible with the limited money that we have. So that's what we're trying to do. And hopefully this will help the climate transition move forward.
Great. Thanks, Maya. Lisa, what would be your takeaways?
Yes. Well, I think, I very agree very much with what Maya has said. So I think also, I think that the whole sequencing, so that we don't think that we're all competing about the same project with the same instrument. So I think sequencing is really key to make most of the financing that we have available, the limited ODA funds, and then the export credit that we can supply. So, and then I think just keeping the momentum, also keeping the eye on the climate finance and not getting distracted by defense and other areas that also need funding. So, yeah.
Very well. Okay, Agnes.
Yes, thank you. So what I take from this conversation is that real impact comes from collaboration, that we need to work with different tools, expertise, and networks, and that we have to invest more systematically in the early stage conversation before projects are structured, because this is where real synergies can be created, and also that we have come really far, but more can be done, and that we can scale solutions to deliver both climate and development benefits that are highly needed.
Thank you very much, Agnes. So, and the final word goes to Igor, surprise, surprise, and you will have some 30 seconds.
All right, all right. Well, my key takeaways, I'm actually going out of this room with a bit more optimism than I started. I'm really happy to see that, there is a lot of progress on more synergies and sequencing. I'm happy that this phrase was picked up several times, and I really hope that this process will result in more climate finance and not, as Lisa said, not being sidelined by other objectives.
Thank you very much, Igor, and thank you to the whole panel. And I think that the four of you beautifully kind of summarized the discussion in your takeaway. So I will not pretend or attempt to do that. I just hope that all of you have gotten as much out of this as have I. I've learned a lot. Please visit the EBA website for further information on our past and ongoing work and what we plan to do in the future. And as I said initially, you are very welcome to continue the discussion with us and the authors in various channels. So with this, I would just like to thank all of you, the authors, those not present as well, the three other authors, and the panelists, Lise, Maya, Agnes, and all other participants. So thank you very much, and see you soon. Bye.